Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Harmony One, whose current price stands at the $0.020038 mark, and here on TradingView the market is down by 0.05%, and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliott waves and the Fibonacci's, and also the key areas of support and resistances. So if you're interested in such content, make sure that you stick around till the end of the video, and I'll kickstart the video by giving a brief of what has been happening on these charts. Harmony One from the all-time high has been seeing lower prices in this massive ABC correction, which has now taken us back to around the $0.016 mark. And starting my analysis here on the daily chart, after making our low at around the $0.016 mark, we had been seeing higher prices. We continued pushing higher, managed to break above key areas of resistances, and at the key area of resistance at around the $0.03476 mark, we got rejected, and we are seeing a massive pullback to the lower side. And in this movement right here, we have seen the formation of a chart pattern, which is a double top. And if I draw it out here on this chart, we can have it like that. So you can see I have my two bottoms down here. You also have the neckline of that double bottom right there, and this is a pattern that normally breaks to the upside, having the target area of that breakout as the height between the neckline and the bottoms. So using a trend line, we can get the height between the bottoms and the neckline, then place it over here to get a target area for that breakout to the upside, which gives me a target area back to around the $0.05129 mark, and that can only play out in case we continue to see an increase in volume on the Harmony One chart and also in the whole crypto market. So let's be patient and see how that plays out. Going back to the 4-hour chart so that we can also see what we have here on the 4-hour chart. Here on the 4-hour chart, after making our low at around the $0.016 mark, we had been seeing higher prices to the upside, and that movement to the upside, I was terming it as an Elliott wave structure in my previous videos, having that as the first wave to the upside. Then we saw a wave 2, a wave 3, then I expected a retracement to the lower side in the formation of a wave 4, then continue pushing high in the formation of a wave 5 to complete a higher Elliott wave count 1, but that movement to the upside got invalidated the moment our wave 4 retraced into the high of the wave 1, and I had to remove the Elliott waves from my charts and view this movement to the upside as something else. And the only way we can view that as is just a massive ABC corrective movement that was correcting that movement to the lower side that gave us a low at around the $0.016 mark. And you can see in this movement right here, Harmony One had been making a series of highs, which was an indication that the buyers were taking over the market, but at some point they lost it to the sellers. And after seeing a massive ABC corrective movement over here, the next thing that we expect on this other side is the formation of a 5-wave structure, and that would mean maybe the low for Harmony One is not yet in, because we are seeing the formation of a 5-wave structure over here, having this as the wave 1, wave 2, wave 3, wave 4, and we have completed the first higher Elliott wave count 1 through the formation of a wave 5 down here. And if I get a little bit into the details of the formation of that fractal wave over there, so that we can also get the key scenarios that I expect to play out. After making a high for that second wave, we saw a very nice retracement to the lower side in the formation of a third wave, and using a trend-based Fibonacci, we can get to see whether it has done the minimum that we expect a third wave to the lower side to do. By connecting the fibs like that, that gives me a minimum target area at the fib level 1.618, and that is at around the $0.02168 mark. And you can see we retraced into that target area and made our low for that third wave at around the $0.018 mark, then continued pushing low in the formation of our wave 5, and having completed the formation of a higher Elliott wave count 1, whatever I expect after seeing that is the formation of our wave 2, and that would mean maybe higher prices, a bit of higher prices could be coming our way here on the Harmony One chart before we continue seeing lower prices in the formation of a third wave. And because the second wave is a retracement of the first wave, we can use the Fibonacci's connecting them from the high of the wave 1 to the low of the wave 1 to give us a minimum target area for that second wave to the upside between the fib level 0.618 and the fib level 0.382 as a minimum. and I can mark that target area here on the charts like that, and that gives me the key scenarios that I expect to play out. Because a wave 2 is a corrective wave, I expect to see a corrective movement over here. That is an ABC corrective movement, and we can see the formation of a wave A over here. Then we continue seeing lower prices in the formation of a wave B. Then I would expect to see higher prices in the formation of a wave C to get us into this yellow target area, which lies between the $0.028 mark and the $0.024 mark. So once we manage to break above this key area of resistance once more, have a retest of that key area of resistance and continue pushing higher, and also manage to break above the key area of resistance at around the $0.023 mark, then get us into this yellow target area, then we can say that we have seen the formation of a wave 2. And then once you have maximized the formation of a wave 2, we can expect lower prices in the formation of a third wave to the lower side, and that would mean a lower low could be coming our way. So let's be patient and see how that plays out, and we can invalidate that movement to the lower side in the formation of a 5-wave structure. In case in the formation of a wave 2 we continue pushing higher over here and also manage to break above the fib level 0.78 fib level. So drawing out the Fibonacci's once more, in case we manage to break above the fib level 0.786, that is at around the $0.03106 mark, then we can say we are not going to see the formation of a 5-wave structure to the lower side to give us a new low, and we can start to sketch out a bullish movement to the upside over here. Jumping back to the 4-hour chart so that we can also take a look at the indicators here on the 4-hour chart. Here on the 4-hour RSI, we are trading at around the 45 mark, and that means we have massive room for us to support any movement to the upside in the formation of our wave 2. Also taking a look at the MACD, we have printed a bullish cross, and that would mean higher prices could be coming our way. So we might see the formation of a wave 2 before we continue seeing lower prices in the formation of a third wave. So let's be patient and see how that plays out, and I'll keep you updated.